Half the year is behind you. The plan you set in January was built on what you knew then, and markets have moved since. Tax rules have shifted, and your own situation may look different than it did just 6 months ago. Mid-year is the moment to check whether the plan still fits the life it was built for. Hi, I'm Paul Carroll, and I want to walk through 3 areas that may be worth revisiting before the year gets away from us. The first is the legislative landscape. There has been meaningful movement this year in the rules that shape estate and tax planning. The estate exemption, contribution limits, and the treatment of certain equity compensation are all areas where the ground can still shift underneath a plan without anyone noticing. And here's the point that matters. A plan is only current as of the day it was written. If your estate documents were drafted under an older set of assumptions, the structure may no longer do what you intended. This is not a reason to act today. It is a reason to look, coordinated alongside your existing legal and tax professionals. The second area is, how does your plan measure against a half year of market movement? I want to be clear about what I mean, because it is not what most people expect. This is not about predicting where markets will go next. Nobody can do that honestly. It is about discipline. 6 months of movement can quietly pull your allocation away from the target that you set. Cash positions build up or get drawn down. Concentrated stock can grow into a larger share of your net worth than you would be comfortable with. For a senior executive holding company equity, now that drift may deserve review. For a pilot approaching a pension election, the income side of the plan may need a second look. The question is simple. Does the plan still match the goals, or has the year moved it off course? The third area is the planning that tends to get deferred to the fourth quarter. Charitable strategy, Roth conversion windows, tax loss considerations, beneficiary and trust reviews. Every year these compress into December, and every year the work is harder and the options are narrower because the calendar is working against you. The advantage of looking at these in the middle of the year is time. Time to model a conversion properly. Time to coordinate a gift. Time to involve your attorney and your accountant before everything is buried in year end. Earlier is not just easier. In many cases, earlier opens doors that a December timeline has already closed. Now, none of these 3 areas require a decision this week. What they require is a look. A plan built with confidence in every last detail is a plan that gets reviewed while there is still room to adjust. If you would like a second set of eyes on where your plan stands at mid-year, Avion Wealth offers a complimentary second opinion service focused on how the pieces fit together across investments, tax, estate. Here's to a strong second half of 2026. Thank you.